If you trade gold and you don't know how to mark key levels or look for the directional buyers, you would always enter the market early or you always exit the market late. Come with me to the board. I'll teach you guys how to mark your key levels on gold, how to spot reversals, spot continuation, and also look for possible outcomes to be able to get what? A good setup. Come with me. Now let's start with the gold 4-hour time frame. So earlier this week, I actually told my Telegram community that they should start looking for buys on gold from this level. Now, why are they looking for buys on gold from this level? Because number one, this market is actually what? This market is actually trending. I've taught you guys about that on market structure. If you've not watched the video, please go and watch market structure 1, 2, and the final part. Then we talked about here also being what? Being an exhaustion and also a continuation, because the market is actually what? Pushing to the upside. Now come to this side also. What does this signify? An exhaustion also that is a continuation, because what? It looks like a wedge and the market continued what? Pushing to the upside. Now whenever it comes to trading key levels on gold, you need to pay attention to liquidity. Very, very important, because once it comes to gold, if you don't know how to spot liquidity, you will become the liquidity. Okay, now in this video I will teach you how to mark key levels and also spot your directional buyers like a pro. Now come with me. Now if you notice on this level here, right, on this level here, we actually had what? We actually had a liquidity resting around this point. We had liquidity resting around this point, right? Now what happened? When gold started the first trending movement, came back to create a wedge formation, which of course is a continuation to continue pushing to the upside. As I've taught you guys, this is where you're supposed to buy, or buy, right? Then the market continued pushing to the upside. Now, when this market was pushing to the upside, I told my Telegram community members to wait for the market to clear this liquidity. Because after this market is done clearing this liquidity, that is when what? That is when the real pump to the upside will actually continue. Now, if you head to my Telegram channel, you can actually see it here. I sent them a daily outlook. Telling them to what? All-time high cooking for gold. Now, when it comes to my daily outlook on my Telegram channel, I always send daily videos every single day to enable traders in my channel to be able to trade confidently and independently. Even if I don't send a signal, once I send the daily outlook, you can use that directional bias to look for entry either to the up or to the downside. Now, let's back to where we were talking about. Now, I told them that gold was going to sell back to this level. Then once gold gets back to this level, what should we be looking for? We should start looking for a new push. To where? To an all-time high. Now, this is a brief explanation of how to spot a directional bias. Now, let's mark the key levels. Now, when it comes to marking key levels on gold, you have to be very, very careful. You have to be very, very careful of candle formation. A candle that looks like this and a candle that looks like this are not the same thing. You can see this candle has wick. This other candle is just a full body. Meaning a candle that looks like this and a candle with this wick are not the same thing when it comes to trading gold. Because whenever you spot a wick underneath the candle, that candle is trying to tell you that enough impulse or pressure is coming into that market. Now, if you spot that wick at the upside, this market is trying to tell you that what? Sellers are coming in aggressively. If you spot the wick at the bottom, it is trying to tell you that what? Buyers are buying back in and entering the market what? Aggressively. Now, if you've watched my videos, how to mark key levels on all time frame, of course, you will know that I always what? I always start from the daily. Now, when you go to the daily, you pick your rectangular tool as usual. You know how to draw your support and resistance. I've actually taught you guys. Remember, a valid support and resistance will always test the market. How many times? 3 times. When the market have tested 3 times, that level is a valid support or a valid what? Resistance level. Now, supply and demand zones are found in those levels. Most people make mistake and they draw their supply and demand zone, how they draw their support and resistance level. So please take note. Then you come back to this point here. You mark the other resistance here, right? Now you can actually see that gold is currently where? Gold is currently at a very strong resistance level, because of course this market have tested it 1, 2, 3, and this is the 4th time. Now, what did I tell you guys? 99% of time, after a market tests a resistance or support level 3 times, the 4th one is likely to break above or below that market. Okay? Now you've already marked your key level on the daily time frame. Now we move to the 4-hour time frame. Now you're on the 4-hour time frame. What do you want to pay attention to here? The key levels that are easily visible. Okay? You come to this part here. Now, unlike other pairs, when it comes to gold, you want to pay attention to where impulse came into the market. Now, where did an impulse come into this market at this point? Here. This is where the trend to the upside started. Right? I'm sure you can actually see it. Let me take this out. This is where the trend to the upside started. Because after the market pushed here, then the market created a continuation, then continued pushing. Now we have 2 types of continuation. There are continuation that leads to a reversal when the market is close to a resistance level or close to a support level. Now what would happen? Those continuation or those exhaustion will lead to what? It will lead to a reversal. While there are continuation that leads to what? The trend movement. If a market is already buying, then the market starts creating an exhaustion in form of a wedge. What is that market trying to tell you? More buy. But if that market has already been buying, right? Take a good look at this part here. The market has already been buying, then the market started creating exhaustion around here, and you start seeing continuation. What is that market trying to tell you? A change in trend. That is reversal. So always pay attention. We have 2 types of exhaustion. An exhaustion that leads to a continuation and an exhaustion that leads to what? A reversal. Please take note. Now let's go back. Now you've actually You've marked your 4-hour key level. Let's change this color to red so that we'll know this is what? This is our 4-hour key level. You've marked your 4-hour key level, right? Meaning every single time that the market bounces back into this point here, you want to what? You want to buy. Why? Because that is your 4-hour key level. Remember, below here is our daily key level. And I've told you, when it comes to trading gold, unlike other pairs, when you see a wick formation under, that market is trying to tell you that what? An impulsive move is about to come in, either to the upside or to the downside. Now let's take this out. Then as usual, we move to what? We move to our 1-hour time frame. Now we've actually moved to our 1-hour time frame, right? Now you're currently on your 1-hour time frame. You can actually spot what? You can actually spot your daily key level, your 4-hour key level. Now we can't be waiting for the market to come here before we buy or sell. What do we want to look out for? We want to look out for where the market would likely retrace. Where would that part be? That's where your Fibonacci comes in. You bring your Fibonacci, you apply it from the last recent low to the last recent high. Okay? And where can you see it? This is where the Fibonacci, the 61.8 zone, is actually showing. You can see it here, very visible. I don't know if you guys can see it. 61.8 zone. From the last recent low to the last recent high. Now, what does that tell you? That is trying to tell you that what? Our next key level that we need to pay attention to is this part here on your 1-hour time frame. Because if the market should break below this key level, automatically the trend has actually what? Changed. If the market should come back below this key level, break it, what would happen? The market has changed trend. The market is no longer bullish. Remember, this market was actually bullish because the trend started from the 4-hour. Now that trend is currently exhausted where? At a resistance level. Now at this resistance level, a supply zone maybe was found here. That was why the market pushed back. Of course, when we go back to the daily, I'll show you the supply candle. If we go back to the daily time frame here, you can actually see the supply here. This is the supply. Okay, that is always pushing the market every time the market comes close to this level. Now let's go back. Now you're on your 1-hour time frame. You've already figured out that this market, if it breaks below here, you should be looking for sell. Meaning, what would you do as a smart trader? You've already seen this wick, right? You've already seen this wick that was created here. You've already seen this wick that was created here on gold. Meaning, you want to pay attention to how this market will react here. You want to make sure that every single candle that would form closes above this level. Because any candle that closes below here will come back here before maybe the push will continue. Do you understand? So you always want to make sure that every candle that forms closes below here. Then once you just get an impulsive candle, what would you do? You start looking for more buy to the upside. Now, how would you know if you should start buying this market or start selling this market? That's where fundamental analysis comes in. When fundamental analysis comes in, it helps you to get directional bias. Now, when we talk about directional bias simply means the direction which the market is actually moving to due to so many factors. Now, your directional bias could be fundamental analysis, technical analysis, matching key levels, good. Your directional bias could be fundamental analysis, maybe checking your COT data, sentimental analysis, good. While your directional bias could just be coming to the chart, looking for exhaustion, looking for continuation, finding out if this market is bullish or if this market is bearish. Then you are either having a directional bias for a buy or a directional bias for what? For a sell. Please and please take note, when it comes to marking key levels on gold, unlike other peers where you just focus on the levels or the zones where the market is likely to react, on the gold time frame, you want to focus on those candles where those big impulsive moves started. Those are the key levels you want to pay attention to. You can see an example here. Why did we pick here as a key level? Because this is the 100% for the 1 hour if you use your Fibonacci. Meaning this is where that impulsive move started. If this market should break below here, the trend have changed. Except the market break below here, then close above here. That's when you want to continue to look for more push to the upside. But it's unlikely for this market to break below here and not come back to retest here, then continue selling. If you're able to apply these two analyses from your daily, you mark your resistance level, support level, those are your two key levels where you don't expect the market to break below or above. You come to your 4 hour, you mark the key level where the original trend started from, either on the buy side or on the sell side. Then you come back to your 1 hour, look for where the market is likely to change a trend. That's where you get your directional bias. Then you can scale all the way to 15 minutes or M30 if you're looking for a short trade. Okay, for example, now a trade like this, since the market is actually showing exhaustions, what can you do in a situation like this? You can actually be looking for more sell. Okay, in situations like this, what will you be looking out for? Let me take all these out so you can actually see them clearly. Good. In situations like this, what's this market forming here? This market is currently forming an exhaustion. But the fact that this market is forming an exhaustion, we can actually see what? We can actually see a huge momentum here, meaning buyers are waiting here. And remember, this is our 1 hour key level. Okay, remember this is our 1 hour candle, meaning if this candle should close this if this candle should close below where this enough momentum came into the market like this, you want to look for sell here and sell it where? Back to the 1 hour key level. But if the candle struggles above this level here and refuses to close below, what will you be looking out for? You'll be looking out for what? You'll be looking out for a retracement back to the upside. Please and please take this advice very, very serious. And when it comes to marking key levels, spotting exhaustion, spotting continuation, spotting when a trend is either bullish or bearish, and also looking for a way to find your directional bias, this video would help you perfectly. Please and please, I don't offer investments. There are so many scammed Tony Sniper Telegram channel that are asking people for $100 to $2,500, $100 to $10K. Please take note. I would never ask you for an investment. I would never DM you first. And none of my educators or workers would send you a message and tell you to pay him or her. Always request for a video call before making any payment, especially when it has to do with what? Investment. Now, I will continue to drop quality videos like this to help every single trader. Advanced, beginners, they will all pick a thing or two from here, okay? Now, let's move to Forex Factory. Now, when you're done marking your key levels for gold, that is when you come back to your Forex Factory, just to be sure that there are no red folder events that day that would affect the market. When you're able to detect that there are no events that day that would maybe change your bias, because you could be right, you can actually be looking for a buy, you can actually be looking for a sell, and a news event will come out and it will change your bias. So please and please take notes, stay informed, trade like a sniper. Remember, we don't rush the market, we allow the market come to us. I remain Uko Anthony Uche, also known as Tony Sniper. Peace, guys.